Hey everyone, and welcome back to the channel. Today, we're diving deep into the NZD USD pair, also known as the Kiwi, which has been showing some interesting moves. After a bit of a slump, the Kiwi is staging a comeback, bouncing back from a 7-month low around 0.5690. It looks like it's setting its sights on a key hurdle, the 9-day exponential moving average, or EMA, which is currently sitting right around the 0.575 mark. So, what's driving this? A big factor is the recent pullback in the US dollar. The US dollar index, which measures the greenback against a basket of other currencies, has eased off its recent highs. This happened after some slightly softer US economic data came out, particularly the ISM Services PMI, which dipped a bit in September. This dip has traders thinking that maybe, just maybe, the Federal Reserve might not need to be as aggressive with interest rate hikes as previously thought. As a result, U.S. Treasury yields have also retreated, taking some pressure off the U.S. dollar and giving currencies like the Kiwi a little room to breathe. Now, let's look at the technical picture for NZD USD. The immediate challenge for the bulls is to break and hold above that 0.5750 level, where the 9-day EMA is acting as resistance. If they can successfully clear this barrier, the next target could be the round number resistance at 0.5800. A solid move above that would be a very positive sign, potentially opening the door for a push towards the 0.5860 area, which was a significant high back on September 12th. However, we also have to consider the downside. The overall trend is still bearish, and the momentum indicator is signaling that the bears haven't thrown in the towel just yet. If the Kiwi fails to break above that 0.5752 resistance, we could see it slide back down. The first line of support would be the recent low around 0.5690. If that level breaks, the next stop could be the 0.565D area. And if the selling pressure really intensifies, we might even see a test of the November 2022 low, which is all the way down at 0.5565. Looking ahead, the big event to watch this week is the U.S. non-farm payrolls report. This is a huge piece of economic data that gives us a snapshot of the U.S. labor market. A strong report could reignite bets for another Fed rate hike and send the U.S. dollar soaring again, putting pressure back on the Kiwi. On the other hand, a weaker-than-expected report could reinforce the idea that the Fed might pause, which would likely be good news for NZD USD. So, keep a close eye on that release. It's going to be a major market mover. That's the breakdown for the NZD USD this week. It's a classic battle between a short-term bounce and a longer-term bearish trend with a key resistance level right in the middle. Thanks so much for watching. If you found this analysis helpful, please hit that like button and don't forget to subscribe and ring the bell so you never miss an update. See you in the next video.